Good morning, everybody. Welcome. We had a couple people in the waiting room. I know you're all getting in right now. Welcome, welcome. Feel free to start some chatter in the chat. Where's everybody joining from? I'm in San Francisco. It's been pretty warm the last couple days. I'm ready for it. Hi from Tennessee. Hi from Michigan, Reggie. Gail, Oakland, West Coast represent all over the place. Oregon, Louisiana, Chicago, Queens. I love it. Well, we are nationwide, so I'm glad that we're representing. I'm going to give it good morning from Silicon Valley. Hello. You're close by. 151 people have joined. I'm going to give it a minute just to let people get settled in, and then we'll dive in. Temecula, LA, Dallas, Nevada. Sweet. Portland. Well, welcome everybody. You are joining this webinar because you are interested in learning more about S Corps and collective, particularly how you can elect a retroactive S Corp status, and maybe save some money on your tax bill. So I'm going to dive in. First, my name is Marissa. I've been with Collective for over 3 years. I have a public accounting background, so I've seen too much in the tax world, so I'm happy to answer questions in the live Q&A at the end of this session. This is recorded, and there will be a post-webinar email that's sent out that you can watch the recording. So if you have to hop or your question doesn't get answered, we're going to do our best to get through them. But we will be recording, sending it out at the end. Please, active participation in the chat and the Q&A is also always welcome. All right. So again, I'm Marissa. I'm going to walk you through a short agenda, and then we're going to actually make this super engaging, pivot over to a live Q&A at the end. We're going to cover how an S Corp election could lower your tax bill. We'll talk about the nuances there. What is a retroactive S Corp election, and how to achieve it following the IRS late relief process. Who's eligible to elect the S Corp status following late relief, and how to make the election. A little plug on how Collective makes it easy, and then we'll turn it over to you all with hopefully some great questions, a great conversation. This webinar is for educational purposes only. Nothing contained in this presentation should be construed as legal or tax advice. Always consider consulting a professional if you need legal or tax advice in operating your freelance business. And we're going to dive in. So how an S Corp can help lower your tax bill. A little bit of context and foundational building here. What is an S Corp and how do you set it up? When you go to form a business, it initiates in your home state. So you first establish a legal entity structure. So here on the left, we've got the legal statuses. These are businesses that you can form at the state level. Common formation statuses are LLCs, domestic corporations, or professional LLCs. This legal foundation is what gives you a layer of liability protection. It separates your personal and business assets. It's what gives you a separate tax ID, so you don't have to issue out your social security number. And it's also the foundation to elect S Corp status. So forming a legal structure is usually the first step it is the first step in becoming an S Corp. Then we pivot over to the tax status. So this just tells the IRS separately how you're going to report your business activity from a tax perspective. So if you are a sole proprietor, no business is formed, you're working with your social security number, which is totally fine. It's the simplest form of running a business. Your tax status is a sole proprietorship or a disregarded entity, which means all that business activity gets lumped into your personal tax return. If you're familiar with that process, you fill out a Schedule C. It's essentially a summary of your profit and your losses or your expenses throughout the year. Um, the advantage of this tax status is that it's easy. The backend reporting is relatively simple. You can use an Excel spreadsheet to track income and expenses, and then you file one tax return every year. So it's pretty simple from a compliance and record keeping perspective. Also less costly. The tax status for an S Corp changes the compliance requirements. So when you add this layer to elect S Corp tax status, it triggers additional compliance, which we'll touch on. So high level, the context for building or getting to an S Corp is one, it starts as a legal foundation. So LLC, corporation, PLLC. Then you layer on the tax election on top. Now, why would you consider S Corp status? Usually it's looking for a tax savings opportunity. So just for context, we're going to cover how do you pay taxes now if you're set up as a sole proprietor or a single member LLC. Everybody here pays income tax at some capacity. Income tax is determined by your filing status, so single, married filing joint, head of household, and then within each of those statuses, there are tax brackets depending on your household income. So income tax is assessed on your entire business profit and household earnings. Then, if you're structured as a sole proprietor or a single owned LLC, you also pay self-employment tax on your business profit. So self-employment tax is made up of two different taxes, Medicare, which is 2.9%, and then the Social Security, actually these numbers are flipped. The Social Security is 12.4% for a total of 15%. So people who are self-employed reporting on their personal tax return are going to pay maybe 3 layers of tax. They've got federal income tax, state level income tax, and then this 15% layer of self-employment tax on top. So the entirety of your profits are subject to 3 layers of tax under a sole proprietor structure. So how does this change when you elect S Corp status? Beyond the compliance that's triggered, and we'll cover what comes with electing S Corp status, what the S Corp lets you do is it requires that you as the owner pay yourself a reasonable salary. And instead of paying this 15% self-employment tax on your entire business profit, you will only pay self-employment tax on this allocated salary. So how do taxes change when you're an S Corp? The first point, no self-employment tax on S Corp profits. You always pay income tax, but it's just carving out a smaller portion to only pay the self-employment tax on. What else changes? Once you elect S Corp status, the hats you wear change from a tax perspective. Now you're both your own, the business owner, and you're your own employee, which means due to this tax status, you are required to pay yourself a salary for your role as like the CEO or business owner and operator. Your salary becomes a deduction, and the salary is also the means to reduce the self-employment tax. Again, your salary is the portion that's only subject to the self-employment piece. So this is the Social Security and Medicare. This is the vessel that lowers the tax bill. And then reiterating, you can't get out of income tax, unfortunately. So you will always pay income tax on all your earnings, all your profits. Again, this S Corp is just carving out a smaller portion to control and reduce the self-employment tax component. And so here's a practical example. Maybe this applies to a lot of folks here on the call. The savings breakdown between both instances. So on the left is representing sole proprietors or single member LLCs. Again, these are people who report their business activity on the personal tax return on Schedule C. And in this example, we're going to compare somebody making $160,000 of profit between both tax statuses. So on the left, we've got 160 of profit. This is after all their eligible write-offs have been accounted for. Under the sole proprietor structure, that entire 160,000 of profit would be subject to the 15% self-employment tax, which is yielding this about 25,000. On the contrary, if this person had an LLC and then elected S Corp tax status with the same 160 of profit, the S Corp would require them to pay themselves a wage. So in this instance, the wage is $60,000, which means only $60,000 rather than the 160 is subject to that 15% self-employment tax. So that's this 9,180, which is yielding a $15,000 reduction in self-employment tax. It's tax that you just don't pay due to the way that this salary is funneled through. A question I get often, and I'm looking over at the chat, and if you have questions, feel free to direct them to the Q&A feature of Zoom, and we'll go over those at the end. A question that we get asked often is, what happens to this leftover $100,000 owner distribution? So under this S Corp structure, that entire 160 is your profit. You've earned that, you're entitled to spend it however you see fit. That's your money. The way that you receive it changes. When you're a sole proprietor, you just take money out. Maybe it's one business bank account and you just spend it for your personal bills, vacations, whatever. That's called an owner draw or an owner distribution, where you take money out of the business to spend personally. When you're an S Corp, you receive your total compensation, this 160, in two parts. One part's the wage, which is funneling through ideally a payroll processor. It's got all the withholdings. It's generating pay stubs. You're contributing to the Social Security and Medicare tax through this wage. And that's one piece of your income. The second piece of your income is the owner distribution component, which is that leftover 100,000. You as the business owner completely control how and when you take that out. It can be like a cash withdrawal from the business checking account. It can be an interbank transfer from personal to business checking. And you own the cadence. It can be in any amount. It can be weekly. It can be sporadically. The short answer is that entire 160 is still yours to use. So that's a question we get often. And if you've got more questions on that, feel free to hit them up in the Q&A. Let's see. So this webinar is really specific to retroactive S Corp elections, specifically the IRS late relief process. It's tax season, and there are a couple deadlines that have already passed, one of which was the deadline to file a prior year S Corp tax return. That was on March 17th. March 17th was also the deadline to make a timely S Corp election for the 2025 tax year. And so we're going to talk about these deadlines, what they mean, what does timely mean, what does retroactive mean, what is late relief, and we'll see if it applies to your situation. So what is a retroactive S Corp election? Sometimes it's referred to as a late S Corp election. Sometimes you might hear late relief. Sometimes you might hear the phrase backdating. Some of these are not official IRS terms or lingo. It's just kind of how people describe what they're doing with this S Corp status. A retroactive S Corp election allows an eligible business to elect S Corp status at a specific date. That's not today. What's the benefit? If you qualify, if you have an LLC in place, it can allow you to capture the tax savings advantage of S Corp back to a past date. Huge advantage. The downside is what compliance needs to get caught up or needs to take place and able to achieve the S Corp status. And so we'll talk about that. I am seeing all the commentary. I appreciate it. I promise we'll get to it. Timely elections versus late relief. So what is this concept of a timely election? In the last week or so, if you were thinking about taxes, it's super topical, and you Googled like, when do I need to do an S Corp election for 2025? You probably found this March 17th deadline. When you make an S Corp election, the IRS rule on the form is that the election needs to be made 2.5 months from the desired effective date. So if you wanted your S Corp effective January 1st, that deadline would have been March 17th to make a timely S Corp election. Here's the asterisk. The IRS provides a very clear late relief process, meaning you can still make the S Corp election after this 2.5 month window. It's just making the election form slightly more complex. So totally doable. I'll put your mind at ease. If you had an LLC already in place, you did not miss the window to elect S Corp status. There's plenty of opportunity. It just means that you're requesting late relief, and there's a way for Collective to help you do that, and we'll talk about what that entails. So pros and cons of late relief and a retroactive S Corp election. Again, we touched on this briefly. The pros, an opportunity to lower your self-employment tax. You can correct an oversight if you intended to do S Corp, life happened and you missed the March 17th deadline. You haven't closed the door on that opportunity entirely. Also, opting to set up an S Corp and put everything on separate financials, a separate business tax return, can start establishing a clear financial story or history for your business. So whether that's building financial statements for future growth, considering small business loans and making financial statement history, there's a lot of advantage in starting to establish this separate reporting. The cons, it gets more complicated. And with that, it gets more expensive. And so we'll talk about what's all included in S Corp compliance. High level, once you elect the S Corp status, you trigger a need for a separate business tax return. So that is also what's due March 17th. With that business tax return, you need more comprehensive financial statement. So a balance sheet may not be something that you've had to report in the past. That's something that would be required for tax reporting on the S Corp. You have a need to pay yourself the reasonable salary, which requires a payroll software. And then filing that business tax return itself can be costly if you try to DIY it or hire a CPA. So the compliance gets to be more costly, and the risk of not following the compliance is that your S Corp election can be revoked by the IRS. What's the risk in that? If you don't maintain compliance, you could have a tax bill as if you weren't treated as an S Corp if you don't maintain that compliance. So it's not a decision to make lightly, making sure you understand the compliance that goes with making this election. It's definitely beyond just filling out the initial form. And that's what Collective's here to do, help you tackle all of that. So who is eligible to make a retroactive S Corp election? Before we talk about the late relief, I didn't want to make this deck too wordy, but overall, there are some stipulations on who is even eligible to elect S Corp status. Nerdy, but the origin story of the S Corp election, it came from a section of the tax code to pivot away from like the traditional C corporation. That's the structure that has true double taxation where the business pays a corporate level income tax, and then the owners pay tax again on the dividends taken out. And so the S Corp election was created as a pivot from the C corporation specifically for small business owners so that they could capture the advantage of pass-through taxation. The downside is it triggered a bunch of extra requirements, but to fit into this bucket to be eligible for S Corp status, it's limiting the scope of how your business can grow. So a C corporation, you can have international investors, thousands of shareholders, different classes of stock. With an S Corp, it's intended to be a small, closely held business. So you limit the owners to, I think it's 100. There's only one class of stock. So this structure is really built for businesses that were truly small. So you want to make sure you fit that criteria first. You have to be considered a permanent resident alien. Certain estates and trusts cannot be owners, less than 100 shareholders, one class of stock. If you meet that criteria, then you're eligible to become an S Corp. Further, who is eligible for late relief? And that's more of what this conversation is about. In the tax form, there are rules on what qualifies or what constitutes somebody to be eligible for late relief. These are consolidated, but high level. You intended to be an S Corp and you missed the deadline. There was a valid reason for filing late. So lack of education or understanding, interpreting the form and the instructions. Your tax preparer was slammed during busy season and missed it, or they gave you wrong information. Um, Again, you have to objectively qualify to elect S Corp status. And then overall, the IRS kind of has like a statute of limitations on electing S Corp status backwards. It's 3 years and I think 75 days within the desired formation date. So technically, you would have 3 years from January 1st, 2025 to elect or retroactively elect S Corp status. Um, with that, you do have to consider what do I need to do to get compliant for those 3 years? So that's a conversation like, should you? Is it worth the cost to get caught up versus the tax advantage if you went back that far? But overall, these are the reasons and the qualifications for who's eligible to file for late relief. How to file with the late relief process. So the S Corp election itself is actually very simple. One, determine eligibility and intent. So that's, the previous slide. Do you check those boxes? Second, file the S Corp election form. It's actually the same form. It's called Form 2553. It's a simple 2-page form. When you file timely, you fill out, the top section with your LLC's EIN, your name, the owners, simple. When you're following the late relief process, so after the 2.5-month window, so after March 17th, the form gets a little bit more complex where you have to state the reasonable cause for filing late. So same form, just slightly more complex, more time-consuming process to fill it out properly to ensure that the IRS approves the late relief request. Again, you want to make sure that this form includes the proper information for the shareholders, the proper effective date, and that the reasonable cause portion of the form is filled out properly. So how Collective makes being an S Corp easy? It's exactly what we're here for. We're built, again, specifically for solopreneurs who want to be taxed under the S Corp structure. How do we make it easy? We handle all of the compliance and moving parts, starting from like the initial LLC formation all the way to the annual business tax return filing. So what does our service include? One, LLC formation. We'll file that S Corp election for you. Then we pivot over to the operating compliance. What do you need to maintain compliance for this S Corp? Monthly bookkeeping. So again, you do need that monthly bookkeeping to generate financial statements. So every month we categorize your transactions. We make sure it matches your bank and credit card statements. Then we push clean financials to your collective dashboard every month. We'll help you calculate quarterly estimated tax payments, both federal and state. You have a need to pay yourself a salary. So a subscription to a payroll software is included and embedded in collective service. We help you decide on a salary, recommend a range, and make sure all the payroll registrations and withholdings are set up. At year end, we prepare and file the business tax return that's included in the cost of collective. You can opt to have us do your personal filings too. And then in the background of all this, you've got a dedicated account advisor. So you've got the emotional and tax support if you need as a small business owner. Your time with them is unlimited with collective. So if you just need to gut check, is this business expense appropriate for the nature of what I do? How can I write off my home office? What retirement options are available to me as a solopreneur? You have unlimited access through your dashboard, Zoom calls, to get support for growing your business. Really the advantage of collective, if you were to tackle this all on your own, which if you're, a tax brain, an accounting brain, or you just like understanding how different systems work, you could totally do this by yourself. What does it mean? It means you're piecing together a couple different moving parts to get the same bundle of services. So whether it's paying separately for TurboTax or a CPA, LegalZoom to do your formation, QuickBooks to do the books, plus a bookkeeper on the side, separately paying for Gusto, all of that's doable. Separate fees, separate interfaces. Maybe you're doing a lot of the work yourself still. If you're a good fit for collective, this is all included under one clean dashboard, one interface, one login, one fee. So that's the advantage. That's why we're here. If this suits your business structure, there's an advantage to electing S Corp status. We will take care of all that for you. Katie, I just saw your comment. You're interested in using Collective. How do I get on your list? There will be a QR code at the end. We're almost there. And I believe Sarah can actually drop in, there she did, the link so you can schedule time with one of our business advisors, have a more personal conversation to see if objectively the S Corp is a fit for you and if we can help you tackle that. If you're somebody who like you feel ready, you also have the opportunity to just click on that link and get started with Collective if you're qualified. So there's two paths. You can talk to one of our advisors. You can follow our self-checkout process if you're qualified to join and get started through that link. So pricing, I think, gee, you just posted a very topical and timely question. What's the pricing? Collective is a month-to-month subscription, so $349 a month. What you pay to Collective is a deduction for your business, so that's a pro. There's two ways to pay, month to month, which is our most popular, or if you like capturing upfront discounts, you can join using our annual plan. It's 15% off upfront. Right now until the end of March, we're waiving our monthly $349. We're also waiving the one-time onboarding fee of $199. So it's about $550 in discounts. So now's a good time to consider this if you need, everything set up or you need a backdated S Corp election and all the compliance that goes with it. Now is a great time. And now it's time for Q&A, and I see 33 questions in the Q&A. We're going to dive in. I'm going to do our best to get through these. If you put a question in the webinar chat, you haven't moved it over to the Q&A section, please do so I don't miss it. As much as I want to hang out and review all the chatter, I am just going to focus on this one little chat box, and we'll get started. Anytime throughout this Q&A section, you can scan this QR code. It's going to direct you to the link to either self-checkout or schedule time with one of our advisors. They are ready to speak to you, find out if S Corp is a good fit, see if Collective can make it easier for you. If we are, write down this promo code. It's also going to be in the email that we send to you after, but you can capture this $349 off if you join by the end of the month. Okay, we're hitting the Q&A section, so please feel free to move your commentary over to the Q&A and we'll dive in. Shailen, yes, this is recorded. Okay, Holly, can you talk about if we have a whole team and not just one person or employee? So high level, yes. Collective is built specifically for a single owned business. We can support up to 10 employees. How does this structure change objectively with an S Corp? An S Corp can have up to 100 owners and any number of employees. So there's no barriers there in terms of the S Corp objectively. In terms of the scope of Collective, we are limited. We're very specific to the solopreneur model. So we are limited to 10 employees. You can have, independent contractors. That's no problem. If you join Collective with less than 10 employees, you would be able to use Gusto, the payroll subscription, to pay them, issue their pay stubs, W-2s, and all that stuff. Holly, I hope that answered. If there was anything more specific, feel free to add to the chat. Will you present a tax comparison between C Corp and S Corp? John, fair question. I do not have that prepared, but high level. C corporations are really best for businesses that want to go big. So think of like Amazon's or Google. They want to IPO, have unlimited investors, different classes of stock. Really what Collective is focused on is the solopreneur, small business owner, which is where this pass-through taxation structure like the S Corp is more advantageous. John, super high level, the C Corp is going to pay corporate level tax, and then it's going to pay tax again on the dividends that the owners take out, versus an S Corp is pass-through taxation, which means the business doesn't pay tax itself, but rather the owners do. Jennifer McAdams, how does the owner's draw get reported and taxed? So all your profit out of the business, both owner's draw and wages, are subject to your income tax rate. Income tax is your, whatever, single, married, filing, joint, head of household, your total household income. and your filing status determines your income tax rate. So owner's draw will be subject to income tax, but it's the portion of that business profit that now gets to skip the self-employment tax layer. Maggie, I've had a C Corp for 3 years now. Can I change my C Corp to an S Corp? You can make an election to be taxed as an S Corp. I will note on the front end, it's a little bit more of a sophisticated transition on the tax reporting side. So a local CPA may be able to tackle that better than collective. But yes, the C Corp can elect S Corp. It's more sophisticated with the way the C Corp captures and reports like distributions and dividends. And because it's switching to a pass-through entity, there's a little bit more complexities on that side. Brenda, what about business expenses? When do those come out of these numbers? So business expenses are written off. So you've got business revenue, gross. Gross is what you bill your clients, straight up money in. Then you've got eligible business deductions, write-offs, expenses. Those all mean the same thing. So you've got revenue minus expenses, which lands you at business profit. So profit's what's left over after you've written everything off. Profit is the number that you split out between your wage and your distribution. Profit is also the number, it's the threshold. And I realize now we haven't talked about this. When does it make sense to elect S Corp status? Usually most folks are looking for a savings opportunity, but when you elect S Corp status, you agree to a more costly compliance. So typically the S Corp will make sense from a savings lens when your savings potential is more than the cost to do the extra work. So really what we're looking for at a high level is your profit over 60,000? Because that's the point at which your savings potential is going to cover the cost of collective or other compliance elsewhere. So Brenda, sorry, that was a pivot from your question. What about business expenses? When do those come in? They're already accounted for in that top business profit number. That profit is after deductions. Can an LLC choose to file like an S Corp? If so, how? Maggie, yes, this is actually exactly how it works. A legal structure, a legal status needs to exist first before electing S Corp status. So an LLC is the legal structure that we recommend for a small single-owned business. That would get established first, and then you add the S Corp election on top of that. The how, the S Corp election is this form 2553. I believe it's noted in the deck. It's, again, that 2-page form that you have to fill out. And if you need to follow the late relief process, you would fill out that reasonable cause section too. Esteban, is $100,000 taxable? So in that example, that was the distribution portion. Yes, that's the portion that skips the self-employment tax layer, but you continue to pay income tax. How much payroll taxes though? So much of that 15,300. So how much of that 15,300 would you actually save? So Jennifer, this is a great question. So payroll tax and self-employment tax are referring to the same two taxes, Social Security and Medicare. The verbiage just changes depending on who's paying it. So when you're self-employed, set up as a sole proprietor or single member LLC, we refer to it as self-employment tax. When you switch to an S Corp and you pay yourself a wage through a payroll process, we now refer to that same Social Security and Medicare as payroll taxes. So that 15,300 is payroll tax or self-employment tax. It's made up of the Social Security and Medicare. So in that example where they carved out a portion to be a wage and distribution, that's yielding $15,000 of self-employment tax that's just not paid. So that's the savings. Nicole, how are distributions taxed as an S Corp? Again, distributions are subject to your income tax rate. They are not subject to the Social Security and Medicare. Is it too late to do an S Corp starting this year? So again, the S Corp election needs to be layered on top of a legal structure. So it could be an LLC. As long as you had an LLC in place as of January 1st, it allows you to retroactively elect that S Corp status. If you do not have a legal foundation in place, meaning you're a sole proprietor, that needs to happen first. So let's say, Brenda, you don't have anything set up and you set up an LLC today and it was approved today. Today, March 26th, would be the earliest day you could elect S Corp status for 2025, which means some of your business activity might just be split between your Schedule C, like you've done it in the past from January to today, and then the rest of the activity would be under the S Corp. Does that separate 100,000 need to be used for business only expenses, and does it get taxed the same as a 60? So that 100K is after the expenses because we're pulling from profit. So business profit is after all the write-offs, and then the profit is what gets distributed out to you as the owner in two buckets, the wage portion and then the distribution portion. So it's already considered your deductions. Does it get taxed the same as a $60,000 wage? That entire 160 is profit, which means it's taxable in the year that you earn it. So it's always going to be subject to income tax. The $60,000 wage is also subject to the payroll tax or the self-employment. The $100,000 is only subject to income tax. Parth, what's the minimum threshold for a reasonable salary? In the example, 3/8 was a salary, 5/8 was a distribution. Can the salary be lower to maximize tax savings? This is a great question. So if you look at the concept as a whole, the lower you pay yourself a salary, the more you save. But this is a very specific part of the tax code that needs to be carefully considered when you elect S Corp status. What's the risk of paying yourself nothing or too low? The risk is that the IRS could reassess that salary for you. Let's say you paid yourself $1,000. Not reasonable, probably in any context. You paid yourself $1,000 annual salary, but your profit was $250. The risk is that the IRS could say, no, wait, based on this business activity, this person's reasonable salary probably should have been closer to $100,000. These are all theoretical numbers. The risk is that the IRS could reassess a wage for you and then assess that payroll tax plus penalties and interest. So that's the risk that you have to consider when you're setting your salary. That said, it's up to you as the taxpayer and the owner to ultimately decide what it is. There is no IRS formula for determining what's reasonable. So the best we can do is maybe establish a range, compare comparable salaries based off of your seniority in a particular role, what region do you live in, and then you can start to establish a range. You might see a 60-40 rule floating around if you do research. This is not a vetted IRS rule, but it's a great rule of thumb. But you want to document how did you arrive at this salary? What's comparable for my region, my state? How long have I been doing this role? Is it full-time or part-time? So there is no number. I can tell you that a lot of people end up choosing something between 30 and 60% of their profit. Again, a percentage of your profit is not the rule. You want to consider the unique facts and circumstances of your total situation, but that could be a good starting point in establishing the range. Everybody's situation is going to be different. If you have another salaried role on the side of your self-employed income, that can be a factor as well. Grace, at what threshold of earning is it recommended to switch from LLC to S Corp? Okay, great question. And thank you for bringing this up again because I did not have a slide on this. If you're looking for a savings opportunity, objectively, you want to consider, is the savings potential that I have more than the cost to do the extra work? Otherwise, you'd just kind of be in the hole for, doing a more complicated tax return, bookkeeping, and payroll. So that's the high level concept. Whether you use collective or DIY it, is this going to cost me less than what I can save? That said, there's no rule about income thresholds to be an S Corp. You can have a loss, you can have zero income, you can have $20,000 of profit and elect S Corp status. It just means in that instance, you might not be saving. So at Collective, most of the solopreneurs that we meet with are looking for a savings opportunity. So that threshold is usually 60,000 of profit. If you live somewhere that's, higher income tax rates like New York City, for example, the situation changes. Maybe we don't recommend S Corp status at all because of some, nuance at the state or city level. Generally, 60,000 of profit is where you want to consider having this conversation. There are now 76 questions. I'll just note that. So one, kudos to this group for the participation and the engagement. I'm going to do my best. If I skip your question, it may be because it's kind of something we've talked about already, but I promise we're going to do our best to get through these. Reggie, can that March 15th date be extended if you file for an extension? So there's a couple different deadlines, some of which an extension does not apply. So extensions are intended for like an actual tax return that needs to be filed. If you had an S Corp tax return for 2024, that would have been due on March 17th, and you could have extended it. For the S Corp election, it does not have an extension date. So if it's past that timely election deadline, you would just follow the late relief process. There are some great questions in the chat. I'm not ignoring you. We are using the Q&A feature or function in Zoom. So if you want to move those questions over, I promise we'll try to get to them. Let's see, Stephen, what considerations do we need to keep in mind if we have a US-based LLC but live abroad? Oh, hard-hitting questions. At what point does it become advantageous to make that switch? I'm going to level with you, Stephen. This is beyond my knowledge base and the scope of collective. I would say when you live abroad, it can trigger a handful of foreign filing requirements. It has to do with, the time spent living abroad. Usually if it's truly living, you want to consult maybe a local CPA or someone with experience in international filings. The penalties for failure to file certain international forms are steep. I think it's like $10,000 per form. So definitely consult a local CPA that specializes in some international filings and considerations. Frankly, it is beyond the scope of collective, so I may just direct you to a local CPA for that one. But it's definitely worth having the conversation. The failure to file is costly. Amy, what if I don't have an LLC set up? We can do that for you. Feel free to book a call and we'll see if S Corp is the right path based on your situation. And if you need us to do the whole thing, we can do the whole thing. Do I have to set up an LLC or can I just set up an S Corp? A legal foundation needs to be set up first. So the LLC or another legal structure should be set up first. It's what gives you the tax ID, the EIN, and you use both that legal entity name and EIN to fill out the S Corp election paperwork. This brings up a good point that I do want to call out. If you were to go to another website or another service, you might see a button that does business formation. You might see a button that says like formation setup S Corp. What's happening there? It's not actually just setting up an S Corp right off the bat. What it's simultaneously doing when you make that selection is it's forming a corporation, a legal corporation. That would be the legal foundation they set up for you. And then it's simultaneously electing the S Corp tax status. So even if you're going through the questions or the prompts to set up an S Corp, it's still following this two-step process. So you're not just setting up an LLC, even though the prompts look like it. It's setting up a legal corporation and electing S Corp status. At Collective, we're specific to solopreneurs where the LLC is the cleaner structure. It's intended for smaller, closely held businesses. So we do the LLC to S Corp path. And Amy, again, we can help you set that up. Ashley, is changing from a C Corp to an S Corp beneficial from a savings perspective? If yes, is it possible to switch back to C Corp? Okay, so you just filed for a C Corp. I guess for Ashley, this is frankly beyond the scope of collective. We're very specific to S Corp, but I would just ask, what's the goal of your business? If you want to IPO or continue to have investors, I would say you're probably in the right tax structure. C Corp allows you to do that. Your legal foundation allows you to do that. If you elect S Corp status, which you can objectively from C Corp to S Corp, and you revoke it, it prohibits you from re-electing for 5 years. So maybe you just consider your timeline. If you're set up as a C Corp as a legal foundation, then yes, you are set up to open up for VCs and investors and classes of stock. But I would say the conversation around whether or not switching to S Corp makes sense, and then consider the timing. If revoking it starts that 5-year clock, that may not be advantageous for your timeline, or maybe it is. I would say that would be a great question for a local CPA, maybe with specific experience in like VC funded corporations. How much income should you be making before it makes sense to set up an S Corp LLC? So I'm going to break this up into 2 questions, anonymous attendee. When should you set up an LLC? An LLC by itself, if you're the only owner, keeps you stuck in that disregarded entity foundation where you put everything on your personal tax return. It's real simple for tax reporting, less expensive. Setting up an LLC itself can open the door for a future S Corp election. When should you do it? I would say typically we see people deciding to form an LLC when they've proven the concept of their business. So, maybe it started out as a hobby, and then you organically started getting referrals and it started to, generate more revenue that you weren't expecting. Maybe at that point, you've proven your concept, you like the groove of being self-employed, you're making money, you're planning to quit the full-time role. Maybe that's the time to establish the LLC. Maybe it's not necessarily at the high profit yet, but setting up that LLC can give you the foundation for a future S Corp election. So they don't necessarily have to happen at the same time. A lot of people have an LLC already that they've been using for a number of years, and then they reconsider S Corp status now. What form needs to be filed to change from a C Corp to an S Corp? Oh, Maggie. What is it called? I mean, it's the form 2553 is the S Corp election. That's the answer. Form 2553. You elect S Corp status on top of the C Corp. Also, what if I want to elect for 2026 and forward? Would I just do that after January 1 next year? Yeah, you have time between January and March 15th of next year to make a 2026 election. Form 8832, Matthew. That is to convert, I believe, the legal structure. Let me get back to you on that. I'm not sure. If it's simply electing S Corp tax status, it would be the 2553. The form 8832 might have a little bit more nuance, but I'm not sure. Let me check. You mentioned some trusts held business do not meet the requirement to be an S Corp. Please explain what trust would meet the requirement and those that don't. SG, I don't know off the top of my head right now. If you were to look up the IRS S Corp election form, there is like a bullet point list of which entities are eligible to elect, and it may state clearly like the specific trusts that are not eligible. I'm sorry, I don't know off the top of my head. Lindsay, you are a current member. You asked about late relief filing. We do that, and we are doing that for you. Depending on when you joined and what tax year, if you just joined and you had an LLC in place already, then you would be eligible for the late relief or the 2025 S Corp election. If you joined as a sole proprietorship, meaning no LLC was formed, this late relief retroactive dating concept would not apply because an LLC needs to be in place first. If I formed my LLC in 2017, I'm just looking at the time. I think this webinar officially ended at 10:45. I'm going to go till the top of the hour. So if you guys are cool to hang, I will keep answering questions. If I formed my LLC in 2017, am I unable to switch to an S Corp now because I'm not within the 3-year window? So the 3-year window applies from the desired effective date. So if you wanted it effective in 2017, that time has passed. You could go back to what's 3 years backwards from now. 2022, technically. That's what the IRS would allow. What would it take you to get there and maintain compliance if you filed returns, like your personal tax returns in the past? It would require amending those personal returns, filing late S Corp returns, doing catch-up compliance. So it's not always advantageous to go back for the 3 years, even though the IRS allows it. But yeah, you wouldn't be able to go to 2017. Can you go from sole proprietor to S Corp? Again, a legal foundation needs to be set up first. So the path that most of our members, well, all of our members take is LLC to S Corp election. If you were to click a button on like a business formation website that just says form an S Corp, what it's going to do is simultaneously form a legal corporation for you with the S Corp status on top. So you never truly go from sole proprietor to S Corp. There's always a two-step process. Can we file to become an S Corp effective 2024 if we didn't have payroll in 2024? Technically, yes. The IRS allows you to do that. What does it cost to get you there? And what's the risk if you didn't run payroll? So one of the key compliance pieces of an S Corp is paying yourself a reasonable wage. So if you were to try to retroactively go back a whole year where none of the compliance was in place, without getting super granular, you have to consider, what do I need to do to meet the requirements of an S Corp? I need to file a 2024 S Corp tax return, which would have been due March 17th. I need to have payroll. So what would it take for me to get that set up? There's payroll registrations required. There's payroll tax returns that would be required. Skipping out on the payroll, there's risk to that. There's rebuilding financial statements if you didn't maintain those. So technically the answer, Jennifer, yes, you can go back to 2024. Sometimes it's more costly than it's worth. And frankly, with the time of year, you'd have to find a CPA who has capacity to tackle it for you. But technically it's doable. You have access to the same support person each time you have a question. Yes. Well, you get an assigned account manager. So you get a dedicated account advisor. Once you've completed like all the onboarding tasks, the front end experience of Collective, we're doing all the initial account setup. So you do talk to different team members of Collective. Once you've completed the onboarding, you're assigned an assigned membership relationship manager. So you will get the same person in your dashboard. There are instances where we need to tap someone from the bookkeeping team or the tax team, and so they may lean in for support, but you have an assigned dedicated account advisor. Also, we consider, PTO, time of year, busy season. Sometimes other Collective team members will tap into support in peak season, but yes, you get an assigned rep. Anonymous attendee, the $100,000 owner distribution. I understand that it belongs to the owner, but how is that portion taxed? Is the owner able to spend any part of it during the year for any reason? Yes, so distributions are leftover business profit. This is after you've paid for all of your business expenses. The distribution is the portion of your profit that skips self-employment tax because it's not running through a formal payroll process. You continue to pay income tax on it based on your personal income tax rate. It's just skipping the self-employment tax layer. And then you as the owner, contrary to payroll, where that's kind of set up on a cadence, maybe every 2 weeks direct deposit, the owner gets to determine when and how much distributions are taken. So you could be, if you like a schedule, you want to supplement the payroll cadence, maybe you take distributions every 2 weeks and it's a flat dollar amount. That's cool. Maybe you can live off your salary and distributions don't happen unless you're on vacation in June. And maybe it's a $10,000 distribution at once for vacation. So you as the owner own the distribution process. It's still profit that will be subject to income tax. Are you able to create or review operating agreements? Can you switch from S Corp to a C Corp in the future? If you revoke an S Corp election, you do default to a C Corp. So that's the easy question. C Corp taxation. If you want to IPO and like grow your business that way, there may be some additional paperwork to change the legal status. I'm not sure on that one, but you can revoke an S Corp election and it will default to C Corp. We do create generic operating agreements when we do an LLC formation. It's specific to single owned business, so it's pretty simple and bare bones and generic. But yes, that's included in the cost of collective. We have complicated construction customer invoicing that I run through QBO. Can I keep QBO and partner with collective? Are there different levels of joining collective? At this time, no levels. And at this time, no, everybody's on collective accounting that joins. I did my fair share of working on some construction clients back in the public accounting days. Frankly, I would probably say collective might not be the best fit if there's more nuance to construction. I know there's some tax implications for construction that are super specific. For invoicing, actually, I'm sorry, I misread your question. Invoicing that you run through QBO, you can keep invoicing on QBO. Bookkeeping is all done through collective accounting. So if you want to keep them together, I would say maybe collective's not the best fit. If you want to isolate the invoicing to QBO and you migrate the bookkeeping component to collective, that could work. Assuming the profile of your construction business doesn't require the super complex tax side. My LLC has been open for 5 years, but was told I had to make over 80,000 to do an S Corp election. Is it better to shut down the current LLC? No, you don't have to shut down the current LLC. Again, the profit thresholds to do S Corp, those are not official IRS rules. You can make an S Corp election at any time. It's just really, when does it make sense from a savings perspective? Is the complexity going to be worth it for the cost? There hasn't been a lot of support specific to solopreneurs. So a lot of the options prior to collective or similar services were old school CPAs or accounting firms that mainly serve bigger clients. And so maybe part of this recommendation for waiting for, 80,000, 100,000 has to do with that CPA's capacity. Or is it worth it for them to, charge you $700 for an S Corp tax return when they could go bill a bigger business $2,500? I'm not sure. That could be part of it. But to reiterate, there is no dollar amount threshold to actually do an S Corp. It's just, where does it make sense from a complexity and savings perspective? Chaz, we're getting to the top of the hour, so I'm going to do 2 more questions. Chaz, for photography, if we have associate photographers who we pay as independent contractors using 1099s, how would that work with collective? So you get a subscription to Gusto, which is a payroll provider. Maybe you've heard of it. It's included and embedded in your collective dashboard. You can pay your contractors through there, and it'll also generate the 1099s for them. Heather, how do you figure out reasonable salary? We did touch on this briefly. It's arbitrary. There's no formula, there's no code. It's really facts and circumstances based. So you may consider where you live, what's a comparable salary for that title, your seniority in that role. Are you dedicating this to full-time or is it part-time? All those factors can contribute to how you determine your reasonable salary. A collective will help you establish a range. What's too low, what might flag the IRS that you're not paying yourself a reasonable salary. And then on the other end, based on your research, what you know about your industry, you can set the other end of that range, and then you choose somewhere in between. I'm gonna do one more. Will I still need a CPA or tax service for filing my personal taxes on the wages paid? So you will always still need to file a personal return. Collective has the option to add on personal filings. So if your return is, relatively simple, you don't have, a million rental properties, check out Collective's personal filing services. Some of our members have a long-standing family CPA that they like to stay with. That's also totally fine. We're going to call it here. I appreciate the engagement. There's so many questions I didn't answer, so many chats I did not see. Thank you for the participation. These are sometimes not that fun when it's kind of crickets in the chat and the Q&A. So again, we really appreciate it. If you're interested in scheduling a call, feel free to scan this QR code. I know that the link was dropped in the chat. Self-checkout is an option if you're ready to get started. You can book one-on-one time with an advisor. And maybe now is a great time to take advantage of our March promo. We are here for you. Thank you for your time. Take care.